There you go.
Good morning, traders. This is Cousin Vinny coming to you from theclosingprint.com on July 23rd, 2017. In this edition of our weekend video newsletter, we'll cover the indices and all of the macro issues facing us this week. We have the S&P 500 up 10.44% year to date. We could be at another pivot high, with junk bonds up 5.39% year to date, also at 52-week highs. The bond stock ratio is currently bullish. We have the indices most closing green for the week, with the Hang Seng up again this week, 1.2%. Tick and Tick-Q show that institutional sentiment remains bullish. It's on the uptick. NYMO and NAMO were also very bullish, hitting extremes around plus 40 last week. That could push a bit higher. It could also start a cycle down at this point, so we'll have to keep an eye on NYMO and NAMO. Breadth is bullish with NYHL moving higher. The moving average is also trending upward. The high-low percent made a huge move last week, up 11 points to 86.93, and the New York Stock Exchange advanced decline continues to trend higher. So that's good. Equity-only put-call ratio is more bearish than bullish at the present time, and VIX is at extreme lows we haven't seen in a long time. We'll cover that as well. US dollar trading at 93.68, which is affecting commodities and buoying gold and other metals such as copper and silver. We have crude flat, holding at the 42 support, with OPEC and Saudi Arabia. With news this weekend, we'll cover that. CRB index is bullish, and we have the heat map trending towards green. XBI IBB is the best bet this week, again, if it continues out of this flag on the daily. XLP and XLU are also very strong, so you might want to consider some of these defensive names. And banks are flat, and IYT fairly weak. It's international, trending towards green. That's bullish. IBD, we have a smaller list, but a lot more focused. And IBD commentary, we've got a few names we'll look at there as well. Consider some weekly calls on these names as prices reach the upper Bollinger Bands, and Bollinger Bands expand and start to turn. Bukowski is showing 505 green on his signals, with the CPI half green since July the 11th, 2017. Here are the spiders, with price action topping at 247.42 recently, and RSI near highs. Is a very good possibility we could flag again and continue to push ever so lightly higher, with another scenario having another test of the 50-period moving average. Now, for the latter to happen, we need to see another higher than average red day on volume and tick cumulative to turn down, because the way it looks right now, we're just seeing rotation. I would think that rotation out of technology makes sense because it's made the best gains over the last 3 weeks. So, although we are cautious, we are watching the 60-minute charts as well. We're trading at all-time highs, so there's literally no one up here to sell to us if they choose to. Price action continues to stay mostly above the 9 and 20 EMA since the moving higher on the 11th. RSI is trending higher. We got MACD turning, stochastics trending higher, and tick cumulative for the most part doing its best to stay above its signal line. So this is more bullish than bearish at the present time, with the caveat that we could put in a lower high on the 60 minutes. So we'll be watching that early this week. Here is the S&P 500 with ARUN indicator enabled, Note that we're up above the 70 level pegged near 100, closing at 96 with ARUN down continuing to trend lower. That lends for the opportunity in the S&P 500 and SPY for higher prices, much similar to what we saw back here in April and May on the NASDAQ, if you remember that ARUN chart. And ARUN continued to point to higher prices on the NASDAQ. We saw all-time highs. We'll get to that in a minute. For now, if ARUN down continues to drop, that shows underlying weakness by the bears and underlying strength by the bulls. Keep an eye on this particular chart version for further developments. So we're looking at NASDAQ 100. ARUN did something very similar. That happened back in December, and that led to a nice move in the markets. From November to the recent highs, we've basically up over 20% on most of the indices. So if you follow William O'Neill's thinking, 20% is a good level to start to consider taking some profits. Not saying that's what's going to happen, because ARUN up remains strong and ARUN down continues to trend to the downside. So we could see a follow through on the NASDAQ as well, even with seasonality tapering off as we near an end to the month of July, the strongest month of the year for technology. The NASDAQ 100 candlestick chart shows a similar fate, if you will, for the bulls. This pivot high at 58.97 appears to be an area where we could consolidate the 3 weeks gains off of that Wednesday Morningstar Doji that led to RSIs near 70, above 50, prices above all of the moving averages. And if it gets above this level here, we could see higher prices as there's no overhead supply. Volume is what leading me to believe that that scenario could play out, as we haven't seen that kind of sustained bullish volume in over a year. We have stochastics embedded and MACD showing full-on bullish momentum. Small caps also show us a very similar scenario, with price action rising along its 9 EMA. The 50 period is rising once again in this ascending channel. Price action is spending most of its time in the upper half of this channel. If you show a linear regression line through the middle of this price action, we are above volume by price support. Note this is a major area below current price action. If there's any caveat this week, it'll have to do with OPEC and the Saudi Arabia oil ministers, being there's a lot of small cap oil producers. That could have an effect on IWM this week. So we'll keep an eye on oil as well as those energy names in small cap group. XLE moved lower on Thursday and Friday after we thought it was going to continue its breakout. Here we have the New York Stock Exchange Composite. Price action also at all-time highs. No overhead supply. RSI rising. Price above its 20 and 9 EMA. Having broken out of this base on base pattern, the depth of this pattern was about 130 points. We tagged that measured move. So now we'll look for some sort of consolidation before we head higher. Reason I'm thinking that is because high-low percent bolted higher by 11 points week over week, showing very bullish breadth. However, we're starting to hit extreme levels north of 85, 87. We closed at 86.93. So it could be an opportunity for the bears. We'll just have to wait and see and look for catalysts that might render that opportunity. The last few weeks, we've taken a look at the Wilshire 5000 as a broad measure of market sentiment and market participation. We continue to break higher, again, out of a base-on-base pattern, tagging the measured move of the most recent period right here. And checking money flow continues to improve. So this is sort of a caveat for the bears. As this rises and starts to hit this extreme level up at these previous pivots, we'll start to look for another pivot high, if not sooner. And finally, we have the Dow Jones Composite, 65 stocks in the industrials, transports, and utilities group. With the transports showing weakness for the last 5 trading sessions, it was a bit surprising to look at this chart and see that it's actually fairly bullish. RSI is above 50. We continue to rise out of this flat skillet or cup pattern and handle. We tried to break out to all-time highs and then got rejected. We are holding the 9 and 20 EMA, however. We're inside of this volume by price band, so we're on the fence. If IYT moves lower, that could have an anchor effect around the neck of the Dow Jones Industrials short term. Volume was above average, so we were looking for that on the move higher. Stochastics looks like it's about to turn, and MACD is flat. So this one looks like a toss-up for the time being, with the caveat that we need to keep an eye on transports. They have to improve, as well as financials, if we're going to break out to all-time highs again. Overall, I'm thinking that we could see a little bit of a pullback over the next week or two, towards the end of July, as institutions will likely start to take profits in technology stocks that have run up during the month of July. So we have more of a cautious tone at the present time. Here is the VIX going back 10 years. We note that it is at extreme lows, similar to what we saw in 2007, which led to the demise in the indices. However, if we go back 30 years, here's that period when VIX was at lows, extreme lows. The markets did turn over. But if we look back in the middle 90s, the indices continued to ramp higher, even after an occasional back and fill moment along the way to the ultimate highs at 11,750 on this Dow Industrials chart. Okay, so the fact that we're at lows on the VIX doesn't necessarily mean we can't move higher. It was a prelude to what happened in 2007, but the circumstances are much different. So if there's any correlation, it's that the markets can continue to rally in the face of complacency as the VIX shows extreme lows. So although we're not unaware of the risks associated with VIX being at lows, we have to look at other things as well to formulate a broader picture. Right now, NYMO is positive and bullish. We're in an upcycle with the summation index on NASI for the NASDAQ composite trending higher. So overall, we're in an upcycle inside of a larger upcycle since April. And we have the same thing happening on NYMO for the New York Stock Exchange McClellan Oscillator. Upcycle, we hit an extreme at 37.15. We could get much higher before we get overbought. Watch this upcycle as we are in a larger upcycle and a short-term upcycle on the NYSE summation index as we trend higher above zero since the November break to the upside. For now, breadth looks pretty good, and if there's any scenario, short-term, we could see some back and fill along the way higher, unless something out of left field comes to the forefront that we were unaware of. Other things to consider are this New York Stock Exchange composite chart, which goes back to 2015, the crossover, the peak in the 50-period moving average, which looks nothing like the present circumstance until we start to see a rounding effect, as if the 50 starts to turn and we have a flat situation on the 200, which is nothing like right now. We're in an uptrend with the potential for back and fill along the way until all of this changes. The markets don't top in one day, so we'll definitely see a flattening effect on the 50 at some point if we're to start to think that this secular bull could be coming to an end. And finally, the New York Stock Exchange, new highs minus new lows. Though we do see some red histogram bars, it's not to be alarming. The cycle continues to push to the upside. We could come back down to the 20 SMA, the midline of Bollinger Bands, mean reversion if you will. However, the New York Stock Exchange advanced decline continues to push higher. So right now this is more bullish than bearish as we lead into the end of July. Yields are moving lower over the last week. A lower high pivoting off of this level as well on this 5-year chart, as well as the 10-year. So the Fed has its work cut out for it. If they're going to raise rates, they want to see this starting to move higher again. Stochastics is oversold, so this could turn, and MACD could turn up. So I'm thinking we come down to this lower trend line at a minimum, in addition to what we see on the 30-year, the long bond. Lower highs, and this continues to drop. So we could see lower rates on the 30-year as well. So if yields are moving lower, we should expect to see TLT on this weekly time frame moving higher. Double bottom 2016 and early 2017 is leading to higher prices on TLT. So there is some potential here for a long. Better entry obviously would have been just north of 122.50 2 weeks ago. So if we consider yields and bond prices, overlay it with the S&P in the upper panel on the weekly, there is potential for this to flatten out again or mean revert. For the time being, it looks like bonds are in favor. Equity is trading near all-time highs. So we have a number of caveats we need to keep an eye on, as well as macro issues in the bond market and the currency markets. Here is a chart of the US dollar daily. Note we are at fresh 52-week lows that we haven't seen since summer of last year. This descending effect is having this descent is having an effect on crude oil prices as well as commodities, since most are priced in US dollars. All things considered, assets go through cycles. We pushed higher, and we have these pivot lows right around the 92 level that we saw back in early 2016. Again, back here in 2005, we had a pivot high. We're coming down to that same level. We have a longer term moving average also showing confluence in that zone. We could overshoot and come back down to this level that led to the rally in 2009. So there's a lot of things to watch with respect to the US dollar on longer time frames. I'm thinking we probably come down here and test this level and bounce, since we're oversold, and would likely lead to a bounce at some point in the short term. That will affect commodities, of course, which we'll talk about now. Copper, priced in US dollars, is in this saucer-shaped pattern, continuing to push higher. Gold, of course, rallying to the upside off of these pivot levels, 1210, the 1204 area, where we saw some doji patterns and some wicks showing buyers stepped up. As the dollar dropped, we continued to see higher prices on gold. So look for this to rally back up to this upper trend line at a minimum, as RSI suggests we could visit that level. Volume, MACD, and stochastics all point to bullish scenarios. Maybe we flag out a little bit Monday morning, Tuesday, but overall this looks pretty bullish short term. We got crossovers on the moving averages, price above the 50. We just got volume by price congestion to deal with in the short term. And finally, crude oil managing to stay above this 42 zone that's held for over 5 weeks. If the dollar continues to drop, I would think this is going to have an effect, a bullish effect on crude at some point. That said, crude is more affected right now by news out of Saudi Arabia, the oil ministers, all of which are meeting in St. Petersburg to discuss current output. All right then. Looking at the sectors, we have more green showing up in certain areas. Pause the video and note accordingly the strength in certain groups as we trend in a more bullish direction. Underlying strength begets more buying. International markets continue to show more lime green and yellows. A couple of areas where we see a little bit of redness, but not much to go on there. Overall, most of the international markets look pretty bullish. Certain sectors like real estate are rallying as yields move lower. These will continue to push to the upside as investors chase yield in the real estate market. IYT is the caveat for now. If we don't follow through on this bounce on Friday off of volume by price support, that would mean a test of the 50s likely, and most of the transports would be affected accordingly. If we do bounce and follow through on Monday, Tuesday, this could have a nice effect on your airline shippers and rails. Biotechs are showing the most potential for the most part. A second stage base, if you will, breakout of this level at 72 led to this consolidation zone. Prices are above the 9 and 20. RSI is trending higher. Increasing volume, MACD's turning up. So this looks more of like a risk-on situation as XBI, IBB, and LABU, all the biotechs and pharmaceuticals look pretty bullish. I'd be focused on this group early this week. Energy is a dud. Caught us once more. If this drops any lower and doesn't bounce at the 20 SMA, we're likely going to take this trade off as it's just not giving us any edge whatsoever. Financials are flat. Building a cup and handle pattern or breakout would be bullish for the markets as well as banks and insurers, obviously. XLK is bullish, though there is a caveat of July being the strongest month. August leads to one of the weakest months for technology. So we might see some profit taking up here. We're at a double top, major volume by price support, right around 56.50 on technology. XLP and XLU, however, are very strong, moving above the 9 and 20, big volume by price support level. If you're looking for opportunity, look in the consumer staples components because this looks pretty bullish to me. RSI is rising, volume's increasing, MACD's turning, and STO is embedded. Could be a defensive setup going into August, September, something that we need to consider going forward, as we can see a similar scenario playing out in XLU, the other defensive sector, as it trends higher. RSI, same situation here. Volume increasing, MACD cross, and STO embedded. Very bullish picture for defensive names. XLY is showing a bit of a caveat. As this moves higher, this is actually bullish for equity markets. We put in a low 3 weeks ago, along with the technology sector. This continues to push higher. Had a nice day on Friday, bouncing off of volume by price support above all of its moving averages with RSI moving higher. MACD showing bullish momentum continues and stochastic embedded. And of course, the XLP, XLY staples to discretionary ratio is more bullish than bearish at the present time. Here is the IBD 50 list for the week in candle glance format. If we don't cover a particular stock or your favorite, it's only because we're looking for particular setups with certain criteria being met. As you'll remember, top-down approach, if we have the NASDAQ indices moving higher, we have a sector, XBI, IBB moving higher. We drop down into the industry groups, biotech, and then look at the individual stocks. We have a breakout on Celgene. RSI is rising. We have earnings this week, so we won't trade this one except to scalp it perhaps. Or after earnings, MACD is flat going into earnings. We have nice volume coming in, stochastics moving higher as we trade at 52-week highs. Breaking out of this secondary base, so we should see higher prices. Though I'm not willing to chase it, I'd use the trade of the day setup to enter this one with support at this breakout level at 135.18 and a measured move of approximately 8 points on top of this for your targets in the short term. CGNX, Cognex Corporation, Technology, Electronic Equipment, price action breaking out of a descending channel, which is bullish. Price above the 9 and 20, about to break above this volume by price band. RSI's suggesting higher prices. We have earnings, not this week, but next week. Some nice numbers, increasing volume, MACD turning up. This is a pretty good setup going into the week ahead. Looking for follow through. Momentum on MACD suggests this up mood will continue. Sienna also looking pretty good. I'm showing a cup and handle pattern. This is a little bit elongated. It is breaking above these levels though, along with AAOI and LITE, all three in the fiber optic portion of the telecom equipment group. RSI suggests a follow through. Price action move higher as MACD is turning up, and we're beginning to see volume filter in. Look at your targets. Measured move is about 2 or 3 points on top of this level, so 29 short term. As we start trending above these levels, you got to pivot right here. More than likely we take out these levels overhead on this bullish momentum candidate. ICHR pulled back to the 9 and 20 EMA volume by price resistance level. More than likely this stock is going to break out. However, we do have earnings on Friday, so keep that in mind. Short term, we might scalp this for a day or two if it does see a follow-through day. But with the earnings on Friday, there's a possibility we could see an earnings run on ICHR. Lazard is in the financial and investment services group. We see a second stage base. After this major base was taken out, price action moved higher. Now we're at a double top. More than likely this momentum is going to continue. Will pop on Monday, Tuesday. RSI is rising. We have earnings on Friday. So this would be a short-term trade looking for higher prices as MACD turns up and STO is embedded. The thing I like about this is the pullback was bought, price action rising, and we're seeing it on decent volume. I'd like to see higher volume going into earnings, but for now, we'll keep an eye on this one as a potential trade and swing position. MTSI is breaking above these levels at 62.75. It takes out this level. You got a nice measured move here of about 7 points on top of this level. So 69.70 seems reasonable. We've got earnings 2 weeks from now. MACD shows full-on bullish momentum. Volume suggesting institutions are trading it as RSI and stochastic both move higher. Look for support right along this level. TRU was from previous watch lists. This one continues to push higher. No overhead supply. Earnings early this week on 7/25. We'll look for this as a potential trade after earnings are posted and reported. Support is just below, right around 44, with a measured move of approximately 3 points or 48, especially if earnings are received in a positive light. TTMI was from last week's watch list. Nice breakout. We captured most of this from the 17 level. Again, on this breakout over the last week, pulling back to the 9 and 20 EMA or previous breakout level, PBBO. As earnings are approaching, it's a potential for an earnings run, a bounce, and a follow-through. So watch your IBD 50. There are some names here that we didn't cover that are showing pullbacks that could work, something like EW, etc. ESNT pulling back to the 9 and 20. So there are a number of other names that are not quite set up to perfection. As we see YY, that was a nice breakout, and we need to see a resolution to this flag pattern. WGO, we're also holding a position there, watching for a break higher. This was earnings, this big candle right here. So that's major support down below, looking for higher prices short term. Look for a pullback and then a follow through on your favorite IBD 50 name. Applied Materials was mentioned as far as earnings and potential beats on IBD this weekend. We'll keep an eye on this one. This is from previous watch list. It has earnings on 8/17. Volume has been pretty decent. We're seeing a little bit of a change in momentum. If only for a flag, it's holding the 9 EMA. We see 2 wicks. Look for a follow through and a breakout. Got plenty of time, 3 to 4 weeks before it reports earnings. LRCX was also mentioned for the same reasons. Semiconductors. Watching this for a flag as we enter into the final weeks of July. Lulu was also mentioned. We don't have earnings for over a month. This looks like it's going to continue higher. Use your trade of the day setup for entry, as this one really is starting to get some momentum going short term. Yum Brands is also showing some potential after a second stage base is building at this point. Could break out into earnings. We had a first stage base in this area that led to higher prices. As MACD is turning, more than likely this is going to push to the upside and break out this week. Watch for this double top to hold if you're bearish, and if you're bullish, a breakout would be a nice entry point. Okay, traders, that's going to do it for me for the weekend. This is Cousin Vinny coming to you from theclosingprint.com on July 23rd, 2017. I'll be sending out a watch list in a few hours. I'm running a bit late this weekend. Prior to the opening bell, we'll look at a couple of names, maybe a couple of charts, and we'll post some updates to the trading room accordingly. I hope this helps, and we'll see you in the room shortly.